today's video, I'm going to cover the whole entire market in terms of NASDAQ, Dow Jones, and S&P 500, including the investor sentiment and economic calendar. And obviously, in terms of this week, it's going to be pretty hectic because of given the tariffs between US, Canada, Mexico, and China. And then in terms of economic calendar, nothing too crazy, but I will go over it towards the end. But within those tariffs, I think it poses a good opportunity where I'm going to pop a picture of the futures. They've dropped down significantly 1 to 2.5%, but a good opportunity because it's artificially technically getting pulled down because I'm expecting a resolution at some point. And when that does happen, I would expect the markets to bounce back up, right? Now, it depends on how many days you think it will get dragged down, but we knew that the tariffs were coming and all that stuff. And essentially the retaliation, you could argue not necessarily 100% you would have known, but the investor sentiment for the week of January 29th is 41% bullish, which is still quite significantly bullish versus historical average of 37.5%. But at the same time, the bullish sentiment has decreased a little bit. Prior week was 43.4%. And the bearish sentiment has increased slightly, or a decent amount, I would say, at 34%, when the previous week was 29.4%. But it is higher than historical average as well at 31% versus the 34% for January 29th. So it's a weird situation. The market is predominantly bullish still in terms of investor sentiment, right? But at the same time, we got the bearish sentiment increasing too. So it's a weird situation. In terms of economic calendar, again, nothing really too crazy. I will go over that soon. But the main focus right now is the tariffs. And in my opinion, not a professional, so please do own due diligence and research before buying and selling. But does create a good opportunity to potentially buy some shares here and there. Because again, overall, I think it's predominantly being artificially pulled down, right? Because I'm expecting a resolution nonetheless at some point. Now, in terms of the overall market, the S&P and NASDAQ are showing potentially essentially more downside. This is before the futures got pulled down. And in terms of the Dow Jones, it's actually showing a more upside. So I'm going to show over right about here for the S&P. I'm looking at the ETF SPY ETF for the S&P 500. Same thing, just different ratio. I've shown this in the past in terms of a 2010 channel, upward trend resistance line, upward trend support level, all this stuff. We're in the mid zone, etc., etc. And then these were two major crashes here and there, but I'll cover them in the future when we actually get to that point. But if you look at the 1 year chart, we are in the bullish movement, but it is arching down to the downside. Now, this is before the futures data comes in, and then we see an uptick of increased volume more on the selling side. So if I had to guess, essentially guessing because nobody knows 100%, right? We've been seeing a good amount of support based off the 50-day and 100-day moving average on the 1 year chart, right? And if we get pulled down, I would expect at one point, right now we're sitting at $601.82. One point, the 100-day moving average, we should be bouncing off of. Maybe a little bit slight more pull down, but not too massive. And that 100-day moving average is sitting at $586.48. Again, $586.48. We're at 601.82 currently. This is not accounting for the futures for the time being. But again, the futures fluctuate quite a bit. So be mindful of that. Now, again, indications technically could arch down to the bearish movement. We've seen more selling. We're seeing pull down in the futures. So again, I'm expecting to break through the 50-day moving average, was about 597.36, and then probably get pull down to the 100-day moving average, and then hover around there and then bounce back up at some point. Now, if we look at the 5-year chart, again, this is SPY ETF for the S&P 500. It's showing bearish movement right now. Volume increase has increased to the buying side, but we do see quite a significant pull nonetheless in the futures, and we're pretty much within the zone. More predominantly a reason why I'm expecting this pull down being like somewhat artificial. We see somewhat slight of a support on this upward trend, and you can see cross at 582, so $582 and some change, which coincides with, like I stated, the 50-day moving average. So yeah, actually like slight drop right there. So our 100-day moving average, sorry about that, about 586. So previously I said 582 for this upward trend resistance line, and then 586 with this 100-day moving average. So we might see like a slight drop quicker than the 100-day to 582 potentially, right? There's that. Now the alt chart doesn't necessarily show too much for this situation, just because given how we are in the tariffs mix, but overall still in the bullish movement and ultimately more upsides to come. In my opinion, especially with this current administration, I think the markets will be fine overall. But that's just my personal opinion. Now, in terms of the NASDAQ, I'm looking at ETF QQQ, ETF for NASDAQ. Again, same thing, just different ratio. as well as, if you've seen this before, upward trend resistance line dating back since 2010, upward trend support levels dating back since 2010, false breakouts here, not false breakouts, but breakouts, support, all that stuff, etc., etc. And now this is where we're at right now with the 1 year chart. We are above the upward trend resistance line dating back since 2010, which is interesting enough because it looked like we actually could be fully bouncing back up potentially, but massive pull downs prior to this whole entire futures and tariffs and all that stuff, and volume has been constantly in the selling, which is quite interesting, and could definitely will cross over to the bearish movement in terms of the 1 year chart and come back down and break through the 2010 upward trend resistance line plus the 50-day moving average, heading down to the 100-day moving average potentially, and even maybe the 200-day moving average. So right now the QQQ sits at $522.29, and the 100-day moving average for the 1 year chart is $503.78, $503.78, and then the 200-day moving average is at $482.63. Will we see the 200-day moving average? I don't know. Personally, I don't think so. I don't think that's going to be the case. But the 100-day, yeah, I think that's fair play for sure. For sure. And then if you look at the 5-year chart, it is in the bearish movement, even though for the 5-year chart, in terms of the data point, the last uptick was more on the buying side. We are technically could be heading down for the time being because of obviously the tariffs and all that consideration. But it almost shows that based off the 5-year chart, we could potentially be in the zone of bouncing up because there's not really a major pull. Because I think everybody will know that at one point there will be a resolution, right? But again, nonetheless, bearish movement, and it got stronger too. This was before the whole entire tariffs futures pull down. So if that's the case, we're going to see pretty more significant bearish movement direction for sure. Now the Dow Jones is the only one that's showing difference in terms of upside. Actually, one thing for the all chart for the NASDAQ, it's also in the bullish movement, continuous to the upside as well. Now in terms of Dow Jones, if we look at the 1 year chart, we are in the bullish movement, but technically it could be bullish movement, but it could be pulled down to a bearish movement. I don't think so, just because the Dow Jones has been indicating a strong side to the upside overall, especially if you look at the 5-year chart, I believe. Yeah, 5-year chart, it was in a bearish movement and it was about to cross over to a bullish movement for the time being, and strong upside no matter what, basically. And again, the Dow Jones is not as big as the S&P and NASDAQ in terms of not market cap, but in terms of selection. The S&P has 500 companies, the Dow Jones has 30, right? So it will be less affected technically by the tariffs potentially, but the S&P and NASDAQ will definitely get pulled down, definitely. Now, in terms of the all chart, the Dow Jones showing strong upside. You can see right about here, even solidified more stronger green. Overall, the Dow Jones will get pulled down too. I'm not saying it won't. It will get pulled down. We can see in the 1 year chart right here, arching down, maybe bounce off the 50-day and 100-day moving average, which we, on the 1 year chart, we closed at 44,544 points. And the 50-day, 100-day moving average is about 43,694 points for the 50-day, and then the 100 days at 43,057 points. Now, again, these moving averages move obviously day by day with the price actions, their average moving averages, so they will adjust, but that's around the ballpark. But we'll see for the time being. But there's that. Now, for the economic calendar, it's not really too eventful. There's a couple things on Friday though that could maybe affect the Fed's idea of when to cut rates and all stuff based off unemployment and employment. But for the rest of them, it's just a bunch of speeches. So Monday, February 3rd, 9:45 a.m. we have S&P final U.S. manufacturing PMI. At 10 a.m. we have construction spending as well as ISM manufacturing. 12 p.m. we have Atlanta Fed President Raphael Bostic speak. And then auto sales comes out for the month of January at some point for Monday. And then Tuesday, February 4th at 10 a.m. we have job openings and as well as factory orders. 11 a.m. we have Atlanta Fed President Raphael Bostic speaking on housing. And 2 p.m. we have San Francisco Fed President Daly speaks. 7:30 p.m. Federal Reserve Vice Chairman Philip Jefferson speaks. Wednesday, February 5th, 8:15 a.m. we have ADP employment. 8:30 a.m. we have U.S. trade deficit. 9 a.m. we have Richmond Fed President Barkin speak. 9:45 a.m. we have S&P final U.S. services PMI. 10 a.m. we have ISM services. 1 p.m. we have Chicago Fed President Goolsbee speak. 3 p.m. we have Fed Governor Michelle Bowman speak. 7:30 p.m. we have Fed Vice Chair Philip Jefferson speak. So it is jam-packed calendar, but it's just nothing personally that's crazy major that will move much, except maybe Friday again. But Thursday, February 6th, 8:30 a.m. we have initial jobless claims, as well as U.S. productivity. And then 2:30 p.m. we have Fed Governor Christopher Waller speak. 5:10 p.m. we have Dallas Fed President Logan speak. And then for Friday, February 7th at 8:30 a.m. we have the following: U.S. unemployment report, or U.S. employment report. Previously was 256. This time around, they're expecting 175. So I think, and this was for the month of January, I think this might affect the Fed, maybe potentially. Like the market might perceive it as the Fed might cut rates sooner rather than later, from what they stated. But it's a weird situation because from not the last meeting, but the meeting prior, they said that under the next administration, which is Trump's administration, they're afraid that inflation is going to go higher than expected. I don't know, but I think they're being too judgmental for no reason, and a little bit biased potentially, but that's just my opinion. And they're holding off on rates until the data speaks for itself or something like that. But to each their own, but they're holding off on cutting rates, or slowing down, at least that's what they said, slowing down on cutting rates. And maybe this data could help potentially. So as well as 8:30 a.m. we have U.S. unemployment rate. Previously it was 4.1%. This time around they're expecting 4.1%, so no change for the month of January. Then we have U.S. hourly wages, 0.3 previously. This time around 0.3, so flatlined for the month of January as well. Hourly wages year over year. Previously it's 3.9%. This time around they're expecting a 3.7, so slight decrease right there. And at 9:25 a.m. we have Fed Governor Michelle Bowman speak. 10 a.m. we have wholesale inventories, and then at 10 a.m. we have consumer sentiment preliminary. And then at 3 p.m. we have consumer credit. So we'll see what happens overall in terms of this month, or this week, sorry. And it could be eventful because, again, the back and forth with tariffs and the pull down is going to be massive. At least that's what it looks like in the futures. But that's basically it for today's video. Thanks for watching. I do appreciate it. If you did find it beneficial, consider dropping a like. It does help with the channel, so thank you so much for that. Appreciate it. If you want to see the next time I upload my videos, I upload them every week. Consider following and subscribing so you can be notified when I do. Thanks again for watching. Take care. God bless and peace.